Hey guys, this is Dave from Breakout Buzz. This is my second video for today, and it might be the last one because the markets are really choppy today. So it's really difficult to predict what's going to happen. If I come back today, that's going to be before the end, before the last hour starts, because that's when stocks start to actually move around. That's called power hour. So I would like to talk to you about WPCS, the second trade I made today, which pretty much made me break even for today. What happened here? There are certain strategies that you use when you try to trade a stock. In this particular case, the learning is that a stock's behavior in a bullish market is a lot different from its behavior in a bearish market, because as you can see, this is Wednesday. Today the stock just shot up at the open. It went all the way up to about 260, which is an incredible price if you consider that just yesterday you could have bought this for 124. That's what's beautiful about stocks at this level. However, you need to be careful as to when you time your entry. And what happened with me was that I was watching the stock shoot up. I followed my rule not to chase the stock going up, because you never know when it's gonna break down, and if you, let's say you buy it at 240 expecting it to just go up, you would be in big trouble because it came all the way down to currently at 273. So obviously you need to be careful about your entry. Generally I would advise you to try to aim to enter a stock either at the very beginning of the market open or at the very end when it closes. Those are the two most volatile hours or hours and a half of the market. So in my particular case, I just want to show you what I did, why I did it, and what happened. So as you can see, the stock broke down pretty significantly all the way to about this price level here, about 180, 175-ish, and then it went on from, let's say, 12, 10, 12 to around 11. So almost an hour consolidating at that level. Now, if there's a stock that ran before, everybody's watching the stock and everybody's trying to do something called dip buying, right? So they're trying to figure out at what level would the stock be at its lowest midday price, so that if they buy it at near or at that price, their risk-reward ratio is significantly better than as if you were chasing it and trying to buy it up here. That's exactly what I tried to do. However, unfortunately, I miscalculated my entry, and as you can see, it may or may not come back up. However, right now, it's still hitting lows for the midday segment. What I did was I bought 600 shares at 183-ish at around here, because I figured, okay, that if I buy it at 183, my risk is only up to 175, you see, because at the time this was the lowest price level that the stock hit in this particular period. So even if I bought it at 183, my risk level is only 8 cents. However, my potential reward, if the stock was about to bounce back, would have been, let's say, all the way to 198, because as you can see, that's one level that that we can identify. Actually, I can only draw it for you so that you can see better. This is a level that the stock bounced back earlier, so this could be acting as resistance, and that level is 199. So if I buy 183, 199, that would be a nice profit. However, the next target, which is even nicer, if the stock really picks up, would be either around here or either around here, depending on your, depending on what you consider resistance. Either way, you could make all the way up to 211 or 230, or even it could break a new day high and go above 260, because it had a high pump before. So I'm sure people are watching it. So what I want you to understand here is that the risk reward for this trade was fairly positive. It was favorable. However, what happened? Okay, the market is really choppy. It's not really acting as it used to a few weeks ago or a few months ago. So right now, what's happening is that once the stock is high up in the morning, it tends to just fade away all day, and then it tends to come back a little bit before the close. So you can play that play. However, I obviously underestimated this stock and underestimated how low can it go, because I got stopped out at 171. My stop loss was 173, so I got 2 cents lower than that because of the big jump, as you can see here. And currently it's trading here at around 170, 171, 172. This is a level where I would not enter anymore. Obviously, in order for me to re-enter, the stock would have to break this whole 180 level, and then maybe I would re-enter here at 185. Or if you want to be extra careful, you would try to wait until 2. Once it breaks the 2 level, it's confirmed that there's a lot of volume on it, and it could shoot up again, hopefully in a more favorable market environment. So, with this trade, I lost a bit of money, but I kept to my rules. I set a stop loss. Stop loss stopped me out, so no harm done. And this brings me to about break even for the day. And currently, I'm really careful about touching any other stocks, because just the nature, the behavior of the stocks is really unpredictable. So it's better to stay safe than gamble. So this is from me. Follow Breakout Buzz, subscribe to my blog, and like us on Facebook, because there's a lot more information coming, and hopefully you can learn from it. Thank you.